All right, good morning, trade pros. Welcome to our morning market update for Monday, October the 29th of 2018. This is George Pappas of Trade Pro Academy. Today, we're going to talk about a few things in our morning market update. It is October 29th, which means we have just 3 days left, including today, 2 after today is done, and October is behind us. All right, and I think a lot of traders are going to look at that with a sigh of relief and say, thank God. We can't wait to move over to November, because November is typically a more jolly and positive month as advertisements start to come out for Black Friday, Cyber Monday, and we start to think about the holiday that's next, which is Christmas. And Christmas and the holiday is a special time for a lot of people around the world. So that's kind of where we're at. That's where the market's at. We do have 3 more days to get through, and I'm going to tell you why I think today we could have some more upside. Last night, Sunday at 8 p.m. Eastern, we did a webinar with all of our subscribers. And I had said there that we're going to see a rebound rally, and it's starting. So early week rebound, this is what I was talking about yesterday, guys. We got some of it already. All right, let's recap the markets. In Asia, Japan's down 0.2%. Hong Kong's up 0.4%. China's down 2.2%, while India's up the same amount. So Asian markets are mixed. China down notably on the session. In Europe at midday, London was up 1.5%, Paris was up 0.3%, and Frankfurt was up 1.9%, nearly 2%. So we're getting some gains across the board in the European markets, and that positive momentum spilled over to the United States with the Dow up 0.3, S&P up 0.6%, NASDAQ up almost a whole percentage point. Tech stocks leading the way up. All right, and we're going to talk about tech stocks and earnings coming up in a moment. Crude oil down to the 67.13, the low teens on crude oil at the moment. We're selling off here into the open of the pit session. Let's see what we have on crude. Crude's been sold over 15% in the last couple of weeks off those highs. We've seen some downside, and we've seen in the Commitment of Traders institutional reports that the smart money is flowing out of oil. So where the bottom is, we don't quite know, but we're assuming 66 could be a temporary low. Gold prices are also down a little bit as equities flourish or rebound. Bitcoin's down 0.2% to the 6,400 level, and it seems like it's stuck there. Treasury yield up 1 basis point, still above 3%. And this morning we had a really important number come out, the personal spending. So personal spending is important leading into the holiday season because you start to project what holiday sales are going to look like. Remember that Black Friday is the day that people start shopping on the Thanksgiving long weekend in the United States. Black Friday is important because a lot of retail companies run into loss all year until they hit Black Friday. So that volume helps them get back to black in their books, which is insane. If you think about running a business negative for 10 months of the year, hoping to break even in 2, that's nuts. It's a tough business to be in. That's retail. All right, personal spending down 0.2% versus 0.4 expected. So that was not a good number. That was a miss. That was personal income rather. Sorry, 0.2 versus 0.4%. Personal spending came in line with expectations at 0.4%. Even though people are making a little bit less, they are still spending at a 0.4% increase. And the personal income was revised higher from 0.3 to 0.4 last month. So that kind of offsets it. Personal spending, savings rate is 6.2 versus 6.4%. So overall, people are making a little bit less. They're spending more, and that's coming on the back of decreased savings. All right, if that's you, that's what the report is saying. If it's not you, then you're not average. You trade pros aren't average anyways. You know that. 9:45, you got Fed's Evans speaking, and 10:30, you got Dallas Fed manufacturing survey, and that's it for the day. Nothing major. This week, we got some massive economic news out of Japan tomorrow. We have nothing after Dallas Fed manufacturing. Tomorrow out of Japan, we have their monetary policy statement. They're expected to be a little bit more hawkish than the market gives them credit for. That's going to be at any time after like 11 p.m. Eastern to sometimes as early as 1 a.m. Eastern on Wednesday morning. So that's a late trade for the East Coast. All right. Thursday or Wednesday, rather, we have the Bank of Japan press conference, some Canadian data. Thursday, we have ISM manufacturing and the Bank of England inflation and monetary policy reports. It's very important there. It's going to affect the pound. And Friday is the most important day of the week. We have the non-farm payrolls numbers. They come out this Friday, and it's a very important look at the jobs numbers, and the Federal Reserve uses this data and relies on it very strongly. So we're going to see what that means for the upcoming Fed meeting. And also, it's the last sort of non-farm payrolls before the midterm elections coming up on Tuesday. So there's a lot of stuff to look forward to. Earnings this week, Apple's reporting Thursday, November 1st after the closing bell. Facebook is October 30th after the bell. General Electric is October 30th before the bell. Exxon and Chevron, two energy titans, November 2nd before, that's the Friday before market opens. So a lot of earnings, a lot of key company earnings. And speaking of earnings, here's the latest update. We're getting earnings beats. So that means that the actual numbers are coming above the analyst expectations, but prices are declining. And that's happening on a widespread basis. Alphabet, Harley Davidson, Northrop Grumman, Newmont Mining, Amazon, AMD, a ton of companies are beating but getting slammed. Okay. And two reasons for that. Number one is that we're getting towards the top of an economic cycle, and it's, as impressive as it might be, we need to be exponentially more impressive to be incrementally more bullish. That's one reason. That's the biggest reason. Number two is analysts have been setting really low bars for these companies. You guys notice that? Year over year, it's a negative sales, but the bar for analysts is down here. So the company beats it. They say, wow, GE beat earnings. Yeah, but it's down year over year. And nobody tells you that because a whole hoax here is to beat the analysts' expectations. If analysts expect a dog to come in and poo on their front doorstep, and then it actually happens and it poos twice in front of your doorstep, you're supposed to be happy about that. Just be careful about dogs pooing on your doorsteps. I never thought that would make it into a morning market update. Jair Bolsonaro has won Brazil's presidential election. He is the Donald Trump of Brazil, basically. He's an anti-establishment leader, but at this point, the establishment before him went 15 years in power, caused one of the biggest recessions in the history of Brazil. And who could forget the money laundering scandal, all right, that was tied to their state-owned oil firm. There was a lot of things that were going on that were troublesome. Bolsonaro was an ex-military captain, and his promise, his agenda, platform was order and progress. And he won with 55% of the vote, comfortable win. And, it's very interesting. Brazil's anti-establishment leader is positive for equity markets. If you know his agenda and platform, which I don't have time to go into in very much detail, he also supports tax cuts. So you're going to see a lot of what happened this is kind of like November 2016 for Brazil. All right, that's sort of how traders are interpreting this. I know it's not the right way to say it, but that's what traders are interpreting it. Because the real right way to say it is, you know what? It's October of 2018 for Brazil, and they're going to do whatever the hell they're going to want to do. It's their country. It's different, and they're going to do what's best for their people. Bolsonaro got stabbed during a rally. That's how hardcore this is. There were some people that were against him, but so much so that he literally got stabbed as he was standing on somebody's shoulders during a rally. It was pretty gruesome. There was a video out there. Strange. Don't watch it. All right. The real and the real's up 9.7% against the dollar in the last 30 days. That's their currency. Ever since the win, we're up to 6 months highs on both the Brazilian stock market and the real, and we're up about 13.5% since mid-September. So this win is positive for markets and positive for the economy. Emerging markets are getting kicked in the teeth. So emerging markets slid first on the way down in 2018, and I was talking about this. Hey guys, why is no one paying attention? China's in a bear market. All right, Turkey's down, Brazil's down. All these emerging markets that were up for 8-9 years are now dropping. S&P's still kind of deliriously on new all-time highs, and then the big drop happened in the S&P, down 10%. Now the S&P is starting to catch down to global equities. The question is, will emerging markets be able to rally out first and lead the way on the back of this Brazilian election win? The answer is I don't know. I don't have an answer for you. All right, last but not least, IBM, but we will know, by the way. We will know. The chart will tell us. Everything you need to know is inside the chart. Look at the chart. All right, IBM has purchased Red Hat for $33 billion or $190 per share. It's a 63% premium to what it traded at on Friday. So RHT, the stock symbol for Red Hat, it's probably going to jump up, I'm guessing, on the open, but at least 63%. And if not, there's going to be arbitrage until it gets to 63%. All right, so here's the deal. The deal on this is that's a big acquisition. That makes them the biggest cloud computing platform on IBM, but man, did they pay through their nose for it. Company leverage ratios are very important, and it looks at the debt that they have on their balance sheets, they went from 1.7 debt to 3x debt ratio on their, it's not a debt ratio, it's actually a leverage ratio, 3-time leverage ratio. That's an exponential increase. They paid through the nose to be in that position. So now I got to monetize it and make it profitable. Red Hat has eternally provided Linux and other software that's open source, but still they have a lot of IP, intellectual property, and opportunities. All right, so that's that. IBM will become the world's #1 hybrid cloud provider. IBM is down 5%, while Red Hat is up 51% a share. All right, that's where we need to be at for today. So let's talk about this. Markets are rebounding. I think early morning we're going to see a little bit of a sell-off this week. Slight sell-off to start the U.S. session on low volume. I think we're going to pick those bottoms up and continue to go upwards. All right, we're going to have a rebound until Wednesday. So I'm looking for early week strength, midweek reversal, and then potentially a very weak close into Friday to end this October insanity. Remember, though, that what's the last day of October? I believe it is the Wednesday. Let me see. Yeah, 31st is the Wednesday. So we may not, so the recovery might be one day, it might be today. All right, that's going to speed things up a little bit. The recovery for sure, I think today we're going to see some upside. Tuesday, Wednesday, we see some more stalling, and then strong close into the end of the week. That's what the bulls should hope for. If we have an open that's bullish and a close that's very bearish, that's weak, right? Remember this, only professional traders have been in the game a long time could tell you this. Strong markets, open weak and close strong. Weak markets, open strong and close weak. Remember that. Always, always, always remember that. It's going to help you a ton. You guys have yourself a great day. Manage your risk, trade like a Trade Pro. Don't forget to get our free training. If you go to tradeproacademy.com/free training, we have a 6-lesson mini course I've created for you. And it's actually awesome because it's the first lesson of all of our premium courses. So you get a taste of what's to come. All right, you guys check that out. We'll see you in our trading room. You get a 14-day money-back guarantee. Great time to check it out. Come trade with us. We trade oil, equity indices. We'll trade metals. Some of the guys talk about currencies. We really trade anything that moves. We even traded bonds. What are other obscene things that we trade? Canadian dollar futures recently. Trade just about anything that moves. We're volatility traders. You guys have a great day. Manage your risk, trade Pro. I'll see you tomorrow morning, 9 a.m. All the best. Goodbye.